Welcome to the show. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. This goes beyond tonight, but tonight is the State of the Union address. Biden delivers it. It's required in the Constitution. But this is also the beginning of, truly, this is the beginning of the presidential campaign. Nikki Haley dropped out. Trump has it. The election, for all intents and purposes, is going to start tonight. Tonight is the night that Biden lays out his policies for a second term. He'll get into the accomplishments of his term so far. But basically, the first term is over. Now it's all about politicking, electioning, it's all about campaigning to get through the rest of the year. The November election is not that far away, and we have a lot of things to consider. And basically, we all know that about 99% of the country has already made up its mind about who to vote for. It's all about moving independence one way or another. So anyway, we're going to get into some of the things we could look out for in his policy, some sectors that could be helped or possibly hurt. But then I want to show you the performance of the stock market under past presidents and why it's pretty much a random thing to decide which president would have a negative stock market during their term. People have said to me when Obama, even when Clinton, when Biden came in, the stock market would be down. And they were wrong. And people said to me when Trump came in that the stock market would be down. And they were wrong. So people are just shooting from the hip, coming up with predictions solely based on an emotional point of view, and they're just trying to convey that emotion to someone else. Because when somebody feels a certain way, especially when they feel strongly about it, they love nothing more than to try to convince everyone else around them about that. They just become those annoying people, right? So we're going to take a look at that, take a look at a couple things in the market. So I'll roll the intro and we'll be off in a couple minutes. Please stick around. I think this is going to be a pretty good show. And I want you to please ask me your questions in the comments. If you've got a point of view, you want to say something, say it in the comments. Give me a thumbs up while you're watching. It helps the cause, helps the algorithm, gives it that magic to help spread the good word of the work we're doing here. Here we go. All right. Thank you very much for joining me. I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. It's about helping you to take control of your money. It's about giving you a way to think, about helping you make better financial decisions. We're not about giving you advice. I'm not going to tell you which stock to buy or sell in this live stream. I'm not going to tell you what your specific allocation towards stocks, bonds, and cash should be in this show. I'm not going to tell you if you should or shouldn't buy an annuity or some other financial product. It's about giving you the information and the inside scoop from a financial insider like me. I've been doing this for over 30 years to really help you make the right decision for you, because it's about personal finance. Personal finance is personal. There's no one size fits all. And 10 things that could be good for one person could be 10 things wrong for the next person. Or maybe you just mix it up, 5 and 5. So let's just take a quick look. The market had a little bit of a rebound today, and we're going to put you on the screen first. All right, so here we go. Dow rebounded a little bit from the last couple of days, up 130 points. NASDAQ had a really good day. NASDAQ was down 1.65% yesterday, so was up a little over 1.5% today. So, almost recovered its loss yesterday on the back of NVIDIA and other tech stocks. We'll take a look at NVIDIA because it goes up every day. I mean, every day is a new high, and it is remarkable. The stock rounded at $1.5 trillion recently. in its market cap. Now it's almost 2.5 trillion. In other words, if you take the stock, you take the price of the stock and multiply it by all the shares outstanding, you're getting about $2.35 trillion. Now, is a company that could revolutionize the world worth 2.5 trillion? Could it be worth more? That's ultimately the question you have to ask yourself. And then we fill in the thought process with lots of numbers, growth metrics of the company to see if it could really deliver on its promise. But at its valuation now, it really has a lot to promise. I think with artificial intelligence, what we could expect from the growth, we could see it, but we'll get into that in a moment. We could, or we could not. We'll see. S&P up 52 points, up 1%. Gold continuing its climb above 2,100, now looking at 2,200. Oil has been going up, and it's very easy to notice the price at the pump is about, probably in the last month or so, it's up about 25 to 30 cents a gallon. But the 10-year yield is going down 4.08%. So yields are going down, and the next step for the 10-year yield could be below 4% in the threes again. And the VIX just continues to always stay at these low levels around 14. So let's take a quick perspective here. The inflation is up. It's been moderating a lot. The last 2 months, it's been tough, because it's now starting to bounce a wee bit off of a very low level. And last month, inflation only came out 0.2% higher than expected, but it was enough for investors to say, whoa, maybe the Fed won't cut so often and so soon this year. So there is a little bit of hesitation that we're not getting a soft enough of a landing or soft landing at all. In other words, for the economy to slow down enough to get the Fed to cut rates, which is supportive of the stock market and supportive of the housing market, anything that is dependent on financing, and borrowing money. But we don't want the economy to slow down so much that we go into a recession. And it looks like the Fed is threading that needle. It looks like it. Tomorrow, the big news is we get the February non-farm payroll report. This is the official big monthly report where we find out the unemployment rate of the United States. This is the biggest of the reports. You get it 12 times a year, the non-farm payroll report, or the employment figures, however you want to describe it. And, we're expecting a moderation. We had over 300,000 jobs created in January, close to 250 in December. But we need to see it go down a little bit. We don't want to see a plunge, but it's expected we'll get about 175 to 200,000 jobs created last month, which is definitely a pretty big number, but it still is a moderation for what we've seen almost every month in like the last year and a half or so. So we'll see. But if it doesn't come in line with expectations or a little bit lower, then we have to start putting off the Fed rate cuts, maybe from June to July. And then we have to say, instead of saying 3 rate cuts, maybe we get 2 rate cuts. I think we still get them. Even the Fed says they think they're at peak rates and they could cut. But the Fed has also warned that they are data dependent. They don't want to make the mistake of cutting rates too soon, and then inflation goes back up again, and then have to take away those cuts and start raising rates again. They don't want to do that. They want to really make sure inflation is squashed. The long-term kick against seeing inflation go down is reshoring and friendshoring. As we get off our China addiction for cheap manufacturing, we are now moving more and more production, manufacturing, whatever we do, everything we do. We want to move it more toward domestically in the United States or more toward our friends. Luckily, we have Mexico, which is still a cheap place to manufacture, but not as cheap as China. But without, globalization is what brought down inflation all these years, for about 40 years. And now we are past peak globalization. We're more back to protectionism. It's tough to see inflation going down to the level it was a couple of years ago. So just want to point that out. All right, so we have the big non-farm payroll figure coming tomorrow. And let's take a look at NVIDIA. It's like the story of the day every day. It was up another just about $40 today at 926. So it didn't just break through 900 by a drop or reach a new high by a drop. It went up 4.5% today. It broke through 900 with gumption, with power. So the stock keeps going up, and people keep talking about, like, I people talk about if it's a bubble or not. I think you have to look at your own personal finance, at your own account, if you own the stock, and you have to say, has it gotten to be such a big part of my portfolio that if it were to go down, would I give all that up? Would I be okay giving that up? Maybe I should take a little profit, or maybe I should let it run. These are the decisions that you have to think on for yourself. If you're my client and you call me up, I will help you with that decision very quickly. I'll be able to help you with that decision. So don't hesitate to call. My contact information is clientfirststrategy.com. All right. So NVIDIA keeps going up. When does it stop going up? I think the more people take some profits on it, the more people talk about it going down, it keeps going up. And I think at this point, it is a feeding frenzy. And I think investors have given up on trying to sell it. And they're just saying, I'm not going to sell it anymore. It keeps going up. That's probably when it peaks. We'll see. But I don't, that's my opinion. Okay. So let's take a look at who is the worst and best president that we've ever had. This is since Eisenhower. So we'll call it the modern era. The red are for Republican presidents, the blue are for Democratic presidents. Okay. Eisenhower had a really good 2 terms in office with the stock market. Kennedy Johnson was okay. Then Johnson alone was okay. The first term of Nixon was nothing great. There was some turmoil in that. If you recall, his vice president had to resign, and that's how he came to replacing Spiro Agnew with Gerald Ford. And then when Nixon resigned the office, that's how Ford became the president. Just so you know, Ford is the only president to have never won the presidential or vice presidential election. He was minority speaker of the House, and he was appointed to the vice presidency by Nixon. That's how he became vice president. When Nixon had to resign, it became Ford. Carter had a 28% gain in the stock market. I think when you ask people as to which president had the worst stock market, people reflexively say Carter. But no, it wasn't Carter. Reagan had a pretty good stock market. Bush Sr. had a pretty good stock market. It was a little rocky in the middle, but he had a pretty good stock market. Clinton is the king. He had the best his 2 terms were the best in presidential history. And then Bush saw 2 negative markets in a row. He got slammed. I mean, the beginning of his presidency was bookmarked by the internet bubble and 9/11. The end of his presidency was marked by the housing bubble, the Great Recession that started in 2007 and ended when his term ended in 2009. Then Obama came in at really the perfect time, just by luck. So he had 2 really good terms in office also. And then Trump had a really good 4 years for the stock market, up 69%. And Biden, this is through January 31st of 2023. So this is pretty new, but the market's been up a little bit since then. But it is a positive market. There's been a lot going on. But the worst 2 presidents was Bush Jr., the second President Bush, by far the worst. The second was Nixon/Ford. So the 2 losing presidents happen to both be Republican. A lot of circumstances that have taken place there. And you can't just look at it as a bubble and make your determination that one party or another is better for the stock market. The fact is, presidents try to goose the economy as much as they can. All presidents want to enjoy a strong economy, and they'll try to push policies that will help people and help the economy. Whether you believe in those policies or not, that's what they're trying to do. And by and large, it does typically reflect a higher market. The thing with Biden, what he had is higher interest rates. He's the first president to with that inflation and interest rates went up as much as it did. Interestingly enough, the bubble callers like a year and a half, 2 years ago, the last time the markets were at your all-time highs before they redid their all-time highs and exceeded them now. Today, the Dow and the S&P hit records, by the way. No, I'm sorry, the NASDAQ and the S&P hit records today. All right. By the way, you can't invest directly into an index, but you can invest into a security that tracks or mimics an index. But everyone said 2 years ago, a year and a half ago, so many people, the market's a bubble, and when interest rates go up, it's all over. Well, interest rates have gone up a whole hell of a lot. Inflation went up, and yet it didn't kill the stock market. In fact, the stock market is now higher than ever. And this just goes to show you how tough it is to call bubbles, to call tops, to call bottoms. And this is why we here at Client First Strategy, we are investing for the long term, and our best two tools to remain long-term investors, I'm going to share them with you, are these. See that? You put your fingers in your ears and you tune out all the noise. Thank you so much for watching. I'll watch the State of the Union tonight. If anything major happens in the stock market, of course, I will be here to talk to you about it and put it all in perspective. And in the meantime, if you want to reach out to me, you have a question about your investments, about your financial plan, about your next move, you can reach out to me. Check out my contact information at clientfirststrategy.com. Thanks so much for watching. Speak with you soon.